And I'm gonna, let's see, I'm gonna disable the meeting room. Everyone can come in. And we're live on YouTube. And we're coming up on LinkedIn, on Twitter, and on Facebook. All right, great. Fantastic. Thank you for joining us on the various platforms. Good to see you this afternoon, this evening, or whatever time zone, or this morning, depending what time zone you're in. So we do this every week, and we do live streams every week. So we pick various topics of interest from a tax perspective, and we discuss them every week. So we've had quite a healthy number of RSVPs and questions. I think we had 200 RSVPs. If you didn't get a chance to submit your questions in advance, please feel free to do so. You can just type in the box below. Otherwise, if you've already submitted it, we have it, and we get to them in the order in which they have been submitted. This is being recorded. For those joining on Zoom, you would have seen the message that this is being recorded. So you can feel free to access it afterwards to either, if you just want to revise what we discussed or review what we discussed, or share it with your colleagues or friends. You can do so. It'll be on our website, htj.tax, where you can also see upcoming events. It will also be on YouTube, as well as wherever it is you're going to get your favorite podcast. So that could be SoundCloud, Spotify, iTunes, Amazon, Google Play. Basically, wherever you get your podcast, you can probably find a copy of this afterwards. And we publish on those podcasting platforms every day as well. So we always put out fresh content daily. We've been doing this for a couple of years now, but we will return to in-person events come this January. So from January 2023, we're going to have an in-person event in Portugal to talk about the nomad offshore experience, especially for those who may be the beginning of the journey or would want to perfect their journey. Look at new jurisdictions, look at new opportunities for working remotely, for investing. We're going to be having an in-person summit in Portugal at the end of January. Have a look at htj.tax/events for more details. Just for those who may be new, I'm seeing some names that we've seen before. Welcome back. For those who may be new, understand that we're not here to give advice. What we hope to do is equip you with key principles and subjects and issues that you need to take on board when you engage with your preferred advisor. This could not be advice. There's no way that we can know someone's situation inside out just on a few lines in an email or on a message in a box below in Zoom. So please keep that in mind. You just need to take the issues, digest them as best as you can, and engage your preferred tax professional who's qualified in jurisdictions in which you would like to be exposed. Remember, this is being recorded. If you would like your image not to be recorded, all you need to do is keep your camera off. Otherwise, you will be recorded as well. So with that in mind, welcome, welcome, welcome. And we're going to jump into the questions in the order in which we've received them. Again, feel free to type your questions below if you haven't already done so. So someone is asking, and this is a continuation, I guess. It's a popular topic I find these days. On the back of the live stream we did last week on US Portugal taxes, someone is asking about the treatments of US LLCs in Europe. So an LLC is a unique entity in the US. So in that, depending on the elections that you may or may not have made, and depending on the facts and circumstances, it can be a pass-through. So if it's just one of you in control of your LLC, then it's a single member LLC and could be treated like a sole proprietorship. If there's more than one member, then potentially it can be a partnership. Or if certain elections were made, it can be an SOC Corp. So it is the treatment of an LLC and how it's taxed, how it's regarded, It really depends on the facts and circumstances that are unique to it. So when it comes to Europe, of course, if you're in a jurisdiction, not just in Europe, but anywhere where there's a, especially where there's a double tax agreement or there's a special tax regime, then the treatment of the LLC, the US LLC in that jurisdiction is a special point of concern. Generally speaking, it really, I'm sorry, I can't give a definitive answer because it really is driven by your facts and circumstances. So, for example, if there's real substance, if there's real economic substance in the US, maybe there's a CEO, their employees, or you have partners, business partners in the US, then it is possible that when there's a distribution from the LLC to yourself in another jurisdiction, it can be treated as a dividend. It can be. Alternatively, if there's none, if there's no substance, and for example, is the other extreme, it's a single member LLC, and then you're actually running that LLC from whatever your European country of choice may be, then it can be subject to the full weight of the tax rules in that jurisdiction, because most jurisdictions have a management and control test, and they can view that management and control of this LLC is being done from within their borders. So there will be corporate tax implications or just general profit taxes. Well, so the point is, if you want for it to be treated in a certain way, you really need to speak with an advisor to get an opinion on the present way in which it may be regarded and ways in which you can restructure it to get a more beneficial tax and commercial perspective. But the point is, do not believe that just by having an LLC, you would have the returns or the distribution from that LLC be treated as a dividend in your place of abode or the jurisdiction in which you have your place of abode. So that is, I know that is a perspective that's being pushed in certain other forums, but if you have a look at our website at HDR Tax, you'd see certain court cases and certain references where that has been overturned, and that's not indeed the case. So again, with your US LLC being run or you're receiving distributions from it in another jurisdiction, please seek advice because it can be pretty tricky. Okay, hope that helps. Next question. Right. Yeah. Someone is asking about aggressive tax planning. Well, about tax planning. Okay, let's face facts. The reality is that tax planning or tax structuring, it suddenly has a negative connotation, not just because of the various leaks, Paradise Papers, Panama Papers, Pandora Papers, or whatever. So it's not just a media thing, but in the minds of the policymakers, as well as the various tax authorities, the whole idea of structuring and some sort of arrangement to benefit for just to exploit certain tax benefits or certain treaty benefits, that's no longer it's no longer fashionable. If we had this conversation maybe 20 years ago, 30 years ago, yeah, absolutely, right? You could set up shell companies and you can do this and that, but not in this, not in 2022 as we head into 2023. We're talking about principal purpose tests. There are so many anti-avoidance directives, especially within the EU. Economic substance is, it's that type of legislation and that requirement is being rolled out across most jurisdictions. And those jurisdictions that are hesitant, they are being put in and hesitant to the extent that they still have like offshore companies and zero tax, where they may be viewed as tax havens. They're being put under pressure. So think Hong Kong and the United Arab Emirates being on a gray list. So this is real. This is real. And you can see that most jurisdictions are coming on board and heading in that direction, i.e. moving away from zero tax to putting certain measures in place to ensure that there's this principle, the idea of money should be taxed somewhere. So that's you asked from my perspective. That is my perspective. The days of aggressive tax planning is over. And various jurisdictions are looking at arrangements and they're putting rules in place. And practitioners who still have that old way of thinking, they are, they're becoming rare than they were previously. And I like to give the example of a Facebook friend of mine who he was a Canadian passport holder, is a Canadian passport holder. He was operating out of the Cayman Islands. And, you know, there was, when you are caught by one of the more advanced jurisdictions and you're found to run afoul of the tax rules, one of the questions they ask is kind of like in the movies. They ask you, like, who helped you? So who are your enablers? So I would imagine that a number of people call this guy's name as an enabler. So the IRS, it sounds like something from a movie, but it's real. The IRS put an agent on a plane to the Cayman Islands. And this agent was wearing a wire and he was recorded saying, so this person came, well, I have this amount of money I'd like to invest. Could you help me fix it so that I don't have to report anything? Basically, getting him to admit to helping with tax evasion. So there's no extradition agreement with the Caymans. So it was a sealed indictment. No one knew that there was an ongoing investigation. And then this person jumped on a plane to Miami and he was arrested on trying to enter the US. And there was a plea deal. So he did time and he was released, but he's no longer on Facebook. So my point is this, that if you have an arrangement, an international structure, and there's no real commercial benefit, be careful, be very, very careful. The days of structuring your affairs strictly, especially internationally, strictly for tax benefit when there's no real commercial benefit, I would propose that those days are over. And those people who engage in that activity, they're going to find themselves in some pain later on. And bear in mind that when an enabler is caught, so a tax agent, an investment manager, whatever, the first thing the tax authorities do is go through their books and look at all their other clients because they assume that this is a pattern of behavior. So if it is you work with advisors, even if you're not doing anything shady, right? You're doing the right thing, you're abiding by all the rules. If that agent, if that enabler, that tax advisor, that lawyer, that accountant, that fund manager, whoever it may be, if they get caught, the entire client list is under investigation. So you may be pulled in inadvertently because you are doing business with someone who's playing fast and loose with the rules. So keep that in mind. Moving down your list of questions. Okay, so sorry, someone just sent me a message there. Okay, yes, I'll deal with that later on. What if you have not been compliant with your US tax obligations? Right. Yeah, could we just limit the messages to questions that are related to US international taxes? Uh, yeah, nothing about TV commercials and stuff like that. Thank you. Right. Okay. So if you have not been compliant with your US tax obligations, the question becomes, well, like, what are your options? So generally speaking, of course, you should always seek advice, but generally speaking, the two ways of approaching your journey to become compliant, if it is your non-compliance has been non-willful, so you did not intentionally seek and you didn't create structures with a view to avoiding this known legal obligation, then there's one pathway for you. If it is that you were willful in your non-compliance, so you were intentional in seeking to avoid your US tax obligations, that's another pathway. So the pathway for those who are non-willful typically revolves around something called the streamlined compliance procedure. So under the streamlined compliance procedure, you go back 3 years for tax returns and 6 years for FBARs. And this is driven more or less by the statute of limitations. So 3 years. So the last 3 years for which due date has already passed. So for right now, that'll be 21, 20, and 19. And FBARs, for those who are not aware, under I think the Bank Secrecy Act 1970, 1971, everyone who's US exposed, whether they be citizens, green card holders, or those who have triggered substantial presence, they're legally obligated to report their foreign financial assets. So your bank accounts, mutual funds, brokerage accounts, whatever it is outside of the US, that is subject to US reporting and potentially taxation as well. So that is a legal requirement, and the reporting of those financial accounts are on the FBARs, the Foreign Bank Account Report, otherwise known as FinCEN 114. So the look back period and the streamline, if you've been non-willful in your non-compliance, will be 3 years returns and 6 years FBARs. If your non-compliance has been willful, then you're looking at a version of the voluntary disclosure agreement. And that would be the good thing. I mean, the important thing is the incentive really for you to come forward under one of these two programs would be that you would potentially get to legally avoid some or all of the criminal and civil penalties. So this is a huge incentive. So you go to the IRS before the IRS has found you, and you get an opportunity to avoid some really draconian penalties, which can include jail time. So there's a serious incentive. If it is that your non-compliance has been willful, as we said, you're looking at voluntary disclosure, and you need to reach out to ourselves or whoever your preferred US tax team would be, because then you definitely need legal advice. You should not really attempt that journey of catching up with your past tax returns without getting legal advice from a qualified US tax professional. So I hope that helps. Okay, moving down the list. Someone is asking about Bali, Indonesia. So I think we actually do a live stream on Bali because there's so many remote workers or digital nomads in Bali in Indonesia. So we do one that's special and focuses on US and Indonesia taxes. So I do that with my colleague who is the head of tax at our company, our sister company, Moores Rowland in Indonesia. So Moores Rowland is like the 5th largest accounting firm in Indonesia. So they're pretty well established. I do that with my colleague Dicky. So that may be one for you to tune into. There are past live streams on our website. If you go to the htj.tax and you just do a search in the box, then it'll pop up. But anyway, if you're interested in this digital nomad visa, so we don't normally talk about visa stuff because we're really taxed, but obviously there's an intersection between immigration status sometimes and tax, so it becomes inevitable that we have to explore it. So there has been a lot. It's in the international media, so I'll just make this pretty clear. Within the international media, so people who may not be so clued in and as close to the happenings of Indonesia as we are because of our physical presence in Indonesia, being that there's multiple offices in Jakarta as well as a satellite office in Bali for Moores Rowland. So for those on the outside looking in, there's a lot of buzz around this digital nomad visa. But bear in mind that unlike the digital nomad visa, let's say the welcome stamp in Barbados or the recently passed digital nomad visa for Portugal, there is actually no such thing as a digital nomad visa for Indonesia. It's being lobbied for by, particularly Bali. But bear in mind that unlike Portugal or let's say Barbados or, some of those other jurisdictions, tourism and remote workers are really, really tiny parts of the Indonesian economy. Depending on how you measure it, less than 5 or less than 2%. So it's a big deal for Bali, but it's not a big deal for Indonesia. Indonesia is into natural resources, extractive industries. That's where their attention really is. So while obviously the governor and the politicians in Bali have been doing the right thing on lobbying for their island, Bali is one of 17,000 islands which make up the Indonesian archipelago. And so there's a bigger picture. Understand that Indonesia went through a huge tax reform maybe a couple of years ago, I think 2 or 3 years ago, the omnibus bill. So it was huge by Indonesian standards in terms of the changes to the tax regime. So one would speculate that there's not much of an appetite to undergo any more radical changes to the tax regime. On top of that, I think it was earlier this year, they went through a tax amnesty, another tax amnesty. They've been doing, I think it's maybe the third or the fourth one. Don't quote me on that, but there's been tax amnesties before. So they've just come out of a tax amnesty. So to believe that there's political will to have a digital nomad visa when remote workers already have a basis for staying in Indonesia long term, if they want their social visit, their business, their social visit visas, their business visas, and the like, to believe that they're going to pass something new. I, I I don't think so. I don't think so. When I speak to my colleagues in Jakarta, they're not seeing it. Of course, it could happen. Anything could happen, but it's very, very unlikely. So yeah, I wouldn't hold my breath listening out for any or looking out for any digital nomad visa from Indonesia. And that it's a reminder because this story has been everywhere. So it's always a reminder to look at stories and from influencers, including me, look at everything with a critical eye. Does this person have the expertise to speak on what they're speaking about? Do they have boots on the ground? Are they just sitting somewhere reading stuff on the internet and repeating it to you? So just, don't believe everything you hear on YouTube. That's my point. Okay. Moving on. Okay, somebody's asking about, can I be resident in a country with a treaty with the US and by claiming residency in the US only avoid foreign taxes? Yeah, we get this. We get this. I know where you're coming from. So there are, especially when there's a double tax agreement, there are certain provisions within the tax treaty to have you legally avoid tax in one jurisdiction because you claim a closer connection or you claim to still be properly resident and domiciled in the other one. So it is possible for the US, you get a certificate of tax residency, I think it's a form 6166, by completing a form 8802 or something like that, an application for US tax residency certification. And we've seen it, for example, clients with Spain. Spain is a popular one for us. So someone will come and say, well, I'm living in Spain, but I heard that you can get the certificate of tax residency saying that you're being taxed in the US and you've relieved of the obligation to pay taxes in Spain. Of course, it is possible, but remember these documents are done under penalty of perjury. So there must be a genuine closer connection as described by the treaty. And you must have a place of abode. You must have a place available for your use. I know people come to us and say, well, I can use my sister, I can use my brother's address. That is kind of illegal to misrepresent or lie to the IRS and to lie if it is your resident in Spain or France or whatever, to lie to the tax office in that jurisdiction. So be careful, kind of be careful with that. And as I said earlier, in response to one of the previous questions, yes, I'm perfectly aware we're not going to do it. So unless we're convinced that you really are still properly resident and you have that closer connection, your place of abode, habitual abode, whatever, is still in the US, we go through all the tests, we go through what the treaty requires, we go through the IRS rules, we go through the rules of Spain. If it is, we're comfortable that you check all those boxes, yes, we're going to do our job. But if we think you're trying to cut corners and you're trying to be a bit aggressive in your tax planning, we're going to say thank you, but no thank you. And I'm sure, I know you go online and there are like a million people who do it for you. But remember what we mentioned earlier about enablers. So if one of them gets caught because of another client, then all of their clients are subject to audit and investigation. So even if you do the right thing by virtue of being with a client of a tax team who plays fast and loose with the rules, if one of their clients get caught, you automatically get investigated, you automatically get audited. So kind of keep that in mind. I always say when it comes to the tax authorities, you don't mess with them. You just do things the right way. No sleepless nights. You can just feel comfortable. You don't have to look over your shoulder. just know that you feel that measure of comfort in doing the right thing. So I hope that helps. Okay, so someone, this is a long question by Joy. Okay, I'll read it because I won't try to summarize it because I think it's important. You made certain key points. I'm going to read it all out, right? So, do you have any suggestions for countries to consider with reasonable overall tax situations for US citizens and with residency available? So, you need to get residency. Okay. Running a small consulting business that you need to operate and manage in the location of residency that would otherwise be impacted by foreign control restrictions. So, I guess what you're saying here is that you have a consulting business and management and control is going to be exercised from within the borders of the jurisdiction in which you enter. So like your 1 or 2 person show and so management and control. So when you're looking for that place, you need to consider not just personal taxes, but corporate tax implications as well. Okay, I got you. Ideally, we pay less taxes overall than living in the US. And we don't want to live in Puerto Rico, okay? Because everybody's going to say, "Hey, Puerto Rico," but okay, you've made it particularly clear that you don't want to live in Puerto Rico. Puerto Rico is a great place, and we're actually going to do a live stream with my colleague, with a firm, associate firm in Puerto Rico, coming soon. I don't remember when exactly, but have a look at hj.tac/events. We can find out not just about that upcoming Puerto Rico event, but the in-person event in Portugal early next year as well. Okay. So if it matters, we can stipulate all income is from the business. All clients are outside the country of residency. So I guess all clients are in the US, all your clients are in the US. Okay, I got you. Our personal criteria, you want a warm winter, you want warm weather. Okay, no snow. And otherwise stable weather. So no regular hurricanes or typhoons. Okay, I got you. Allows for gay marriage by law. Okay, that's important. Excellent, stable internet speed, 25 megs or higher, decent healthcare, moderate cost of living. That is 4K-ish for all expenses after tax for a couple in a 3-bedroom or bigger. Business criteria. If we're recognizing the business there, if we're reorganizing the business there, it needs to have reliable banking and it must work with Stripe. Wow. Whoa, Joy, that is a pretty comprehensive message. Okay. So the thing is, sometimes there's a trade-off. So if it is that you want developed infrastructure in terms of reliable banking and stuff like that, basically, all things being equal, you're going to be in a jurisdiction that's going to tax you. Generally speaking, the jurisdictions that don't tax you don't have all the infrastructure that you're looking at. The one exception, of course, is Dubai. So Dubai is at this point 100% tax-free, but remember you heard it here first, that 9% corporate tax that they've levied on internal activity is just the beginning. They're being put under tremendous pressure to get rid of that free zone system. But we'll deal with that in another call. We're going to do a live stream on the Middle East, on the Gulf region later on this year, I think. So stay tuned for that. hcj.task/events. So Dubai will be an exception. The problem with Dubai is that with the banking, it doesn't really fit into, you won't get full features on PayPal and Stripe. The banking isn't like first top tier banking. And of course, there's 7 Emirates in the United Arab Emirates, not just Dubai. Dubai is the most popular, I guess, of all 7. The problem is that you stipulated that gay marriages need to be recognized. So that will be a problem because the Gulf area in general is very traditional, or no judgment. It's their culture, it's their religion, whatever. So it works. Dubai is very tolerant once you don't talk about it and you keep a low profile. But yeah, it's one of those sensitive issues. So with that being a key factor, you're looking at Western Europe. That's it. To check all of those boxes, I would say you'd be looking at Western Europe. And of course, Western Europe is not normally synonymous with tax efficiency. especially if you're going to run a country from a company, sorry, from within their jurisdiction. So yeah, there are attractive regimes. So for example, Ireland. So we did a live stream on Ireland with our colleagues from Dublin, an accounting firm as well as an immigration firm. You can have a look at our website for that one. So there are, when you're running a business, Ireland is very business friendly. I'm sure you'd be able, if you want to relocate your business there. There's of course Portugal, which is pretty popular right now. And the good thing about Europe, as opposed to, let's say, the Middle East, is that you put yourself on a pathway to citizenship. Because you said residency is important, but the point is you're not going to be zero tax. You can definitely be, relative to the US, low tax, but you're not going to be zero tax by coming to certain countries in Western Europe. So I'd say have a look at Ireland, maybe even have a look at the UK. But from an immigration point of view, UK is very, very difficult right now, post-Brexit, to get into. It is possible, anything is possible, but it's going to be difficult. But quite popular right now would be, I think, Portugal, Spain, Ireland. There are certain tax regimes. So there's the non-dom regime in Ireland and the UK, the flat tax regimes like Italy, Switzerland, other parts of the EU. Spain has a Beckham law, NHR, and Portugal. What you may want to consider as well is restructuring your business before you enter Western Europe, if it is that you do decide on Western Europe. And one of the ways we advise our clients, if business is doing well, things are scaling, so maybe it's time to appoint a CEO. And if you have a CEO in the US, so some people already have a network of independent contractors. If you make, whoever your number two person, if that number two person becomes the CEO and you incorporate in their jurisdiction, if it is that they are in the US or they might be in the Philippines or they might, somewhere that it can be an interesting jurisdiction from a tax point of view, it may be worth running the numbers. So in short, to answer your question, given all the criteria you're looking for, fast Wi-Fi, maybe one of the other things that I don't like about Dubai as well is the whole VPN situation, because I've met so many of my clients. I do calls with them on WhatsApp, and so many of my apps are it kind of gets annoying having to toggle and play with those VPNs. But I would have said Dubai were it not for your relationship situation. Your relationship situation kind of would make Dubai not a primary option. I think you're looking at Western Europe, but you would need to compromise on the tax situation. So you can probably work with your preferred advisor. You can reach out to us on a way of bringing your tax bill down, because you can enjoy the foreign earned income exclusion, Section 911. There are certain benefits that can bring you, depending on how you structure your LLC. So, it can come down, but down to zero, probably not, unless, yeah. Okay. Hope that helps. Get advice, have a conversation, but you're probably looking at Western Europe, particularly Portugal or Ireland. Okay. Moving on. This one is, hi, Hannah. See the question below. Hannah is my colleague. So Hannah's the one that emailed you guys to remind you from Eventbrite about this event. Okay. So please see the question below for the webcast. US taxes for international entrepreneurs and expats. The question below was not answered during last webcast. Okay, so I guess this person attended the live stream that we did last week on US Portugal. So, okay, so they didn't get that question answered. We got so many, the ones for Portugal and Spain, they're like our top live streams. We get hundreds of people logging in and they're sending us dozens of questions, and we rarely get through all of them. So I apologize for that, but yeah, Spain and Portugal are just so popular right now. So the question was not answered last week. The question is not about Nexus in the US. So assume that all work is performed outside of the US. sales tax, assume that work performed is consulting. So somebody's doing some consulting. Okay, they want to be compliant with the non-US or the local and international laws. They want to legally avoid US income tax. The question is about avoiding US payroll taxes, FICA, Social Security, Medicare, self-employment taxes, etc. The last week address all of the questions above without answering the question below. Okay, so okay, I'm not too sure what you're asking exactly. So if it is that you haven't identified whether you are a US person or not. So where are you a US citizen, a green card holder, lawful permanent resident, or someone who's triggered substantial presence, and so you have US tax filing responsibilities, right? But if it is, let's say that you're not, right? Then you can set up, yes, you're free to set up a company in your jurisdiction of choice. So for example, I guess you were on the call last week, so maybe you're in Portugal. So yes, you can absolutely, you can set up something in Portugal and you can run it from Portugal because you're the place of management and control of your chosen company, or whether you're self-employed or whatever. You won't, as long as you stay out of the US, you should have no US tax responsibilities as a consultant. So all your sole source of income from the US is consulting, and you're sitting in Portugal, you should have no US tax responsibilities. However, if it is that you are a US taxpayer by virtue of being a citizen, a lawful permanent resident, or someone who's triggered substantial presence, then obviously you're taxing worldwide income regardless of where you are. So you will have US tax responsibilities at a personal level, but your company, if you're one person show, your company is being run from Portugal. So from a corporate point of view, it'll be all about Portugal. So you can do self-employed in Portugal. You can set up a unipessoal, an LDA. They are one-person company in Portugal, but your corporate responsibilities will be in Portugal. And in terms of Social Security, then because you're resident in Portugal, then your social charges will be payable to Portugal, not to the US. So you should have no self-employment tax. You should have none of the social charges and FICA, Social Security, nothing to the US. Everything goes to Portugal based on the income that you pull out. So it's going to be a little bit higher though. So self-employment taxes in the US are 13.3%. In Portugal, you're looking at around 21, 22%. So that's something to keep in mind. But your social charges will be to Portugal, not to the US. Your only US tax responsibility would be personal if you are still a US taxpayer. Okay, I hope that helps. Okay. So again, yes, I'm not going to answer anything about TV. And if, okay, enough. I'm not going to talk about that. So I'm just scrolling down a list of questions. So someone is asking, Sharice is asking, I'd like to find out about incorporating in Delaware while doing business outside of the US. So absolutely, the US is one of the most liberal economies on planet Earth. So you absolutely, you didn't say whether you're a US person or not, but regardless of whether you're a US person or you're not, you're free to incorporate a company in Delaware. You can absolutely do so. The choice of like state within the union, because an LLC is something that's formed at a state level. So you first have to go to a state, for example, Delaware, and form it. And then once you've done that, then you go to the federal government and say how you would like it to be taxed. Because the federal government doesn't exactly know how to treat an LLC. So you need to tell them. If you don't say anything, and it's a one person, it's a single member LLC, then it's treated as a disregarded entity, right? So if it is a multiple, there's more than one member, then it'll be treated as, the default would be a partnership. But you can elect to have it treated as a C Corp or an S Corp. A C Corp as a non-US person, but an S Corp is limited to US persons. Okay, I see you just wrote below that you are a US person. Okay, fine. So you're asking whether using a Delaware company while a Delaware LLC while living and working outside of the US? Is it better than being self-employed? Okay, so here's the deal. There's no tax benefit to forming an LLC, to forming a single member LLC, as opposed to just uh, having you have invoicing your clients in your own name, being self-employed. There's no tax benefit, absolutely none. So those who kind of peddle that idea, they kind of might be misleading. Oh, maybe they refer to facts and circumstances that are unique to that situation. But generally speaking, there's no tax benefit to be had from being a single member LLC. It's not about taxes. It is actually about liability, because I think it was Bill Gates. Bill Gates was in some sort of interview, and he was asked, like, what's the best invention of the 20th century? And you'd expected him to speak about some sort of technology, but he actually said no, a limited liability company, because before that, when someone wanted to go into business, chances are they had to go into business in their own name. And then if things went wrong, they would be fully liable for the debt, or the losses that that business endeavor incurred. So, their homes, their vehicles, their horses, or whatever it is, right? They can be fully liable. But then suddenly we saw the proliferation and promotion of limited liability companies. And then it does what it says. It limits the liability. So suddenly people could be more entrepreneurial, because if things didn't go right the first time, and as an entrepreneur, most people fail and succeed, that's just the way it is, then suddenly your losses will be limited to what you invested in that company. You won't be exposed to, unlimited liability, where people could come and take your personal assets for your failed business endeavor. So that was amazing. So that's absolutely great. So to answer your question, the LLC is really about protecting yourself from lawsuits, or protecting yourself from the activity of the business. And especially with the US, obviously, the US is a very litigious place. A client or a customer might get upset and they can sue you. So you really want to have an LLC. And it's not just about forming an LLC. You need to be conscious of where you're going to form it, because that might be informed by where you are, where the customers are, where you may have nexus, et cetera, et cetera. And you need to run it in a formal way. So you need to segregate the funds from your personal funds. You need to treat it in the way in which one can say that it is a separate legal entity from you. So in the event of some sort of legal dispute, the veil of incorporation cannot be pierced. So the person that's suing you can't go through the company and come after you personally. So it's really important to treat the LLC in a way that it is a separate business from you. Okay. But generally speaking, there is no tax benefit. If it is you, as you mentioned, you're running it from outside of the US, you'd probably want to have a talk with an advisor as to whether the LLC is the best structure for you, because many jurisdictions that freelancers or remote workers go to, they have rules around management and control. So if it is that you're running the company, even though it's a US company, but you're running it from within their borders, then there may be corporate tax implications to that. So you probably want to get advice before you go forward with it. I hope that helps. Okay, yeah, you're welcome. Okay. So I'm seeing one more question that I didn't answer yet. Sorry, but let me do a quick look on Facebook to see if there are any questions on Facebook. Okay, nope. I'm seeing nothing there. Okay, so, okay, great. Okay, so last question. Somebody's asking about influencers and YouTubers. Uh, Personally, on TikTok, I really like Duke Loves Taxes. I've met Duke, and he's a really, really good guy. He knows his stuff. He's genuine, and he doesn't exaggerate in terms, some people kind of like overplay certain tax benefits or certain planning opportunities because they want to attract views. He's very factual. He's entertaining, but factual and honest. So on TikTok, my favorite is Duke Loves Taxes, and I also follow him. He has like 3.4 million followers on TikTok, and he's also popular on Instagram. So I follow him on both. On YouTube, every day I watch Nomad Capitalist. I know that he's probably the most popular in this space, the international tax and immigration space. So everyone I know kind of watches him, Nomad Capitalist. He was the first, and he's done an amazing job. Absolutely brilliant guy. As he said last week, there are two other guys in the space who kind of follow him. They kind of like pattern themselves after him. This will be Offshore Citizen and Wealthy Expat. I watch them as well. Those are great guys as well. But Nomad Capitalist, he's surrounded himself with some really clever advisors, so he knows where to go and where not to go in terms of what he's putting forward in terms of information. I think the other two may not be as sophisticated as him, so they sometimes stumble and they get into spaces where they get it wrong or may intentionally violate certain rules that they may not be aware of because they don't have as much experience as Nomad Capitalists. But all three are great, and I watch all three all the time. Yeah. They're all great content. They're all great content, but in the international space, yeah, I think that's what I look for. So I hope that helps. And I forgot to mention in the summit that we're having in Portugal next year, Duke loves taxes. So Duke, he's gonna be there to share some of his wisdom from a US tax planning perspective. And this guy, check him out. Duke Loves Taxes. He's really, really good. Just do a search for Duke Loves Taxes. Okay. All right. So I think that's it. If there are no further questions, thank you so much for joining us today. Again, we do this every week. I think next week we're doing Australia. So if you have any exposure, any interest in cross-border issues, international tax issues with Australia, US, Australia, or Australia anywhere, please feel free to join us and submit your questions in advance, and we'll go through them in the order in which we receive. So again, great to see you guys. Thank you for joining us. This is available wherever you get your favorite podcasts. Have a look at hj.task/events if you want to log in for a future one. And more importantly, we want to see you in person. So next January, end of January, for Nomad Offshore Summit in sunny Portugal. Have a good evening, morning, day, depending on where you are. And we'll see you next time. Bye-bye.